Okay, so we are going to break down natural gas for you, but I want to start by showing you the trades that we took last week. So if you were not in the members group, you can definitely learn from. So I'm going to go ahead and hit this bar replay, and then I'm going to walk you through exactly what happened at these levels as we sat on this 8-hour chart. That was the beauty here. So we started here with this first green candle right here. Okay, so I'm going to start there. And then we started next with our second candle, which was this red candle, which was rejecting this particular area right in here. So once we saw clear signs coming down here, what we wanted to do is we wanted to go ahead and draw this level that was created right here, because this is where price came from. Now we went over and grabbed our Fibonacci retracement tool, and we went from that bottom wick to the top wick of this red candle right here. Now, first position was that we were sitting down in this 61.8 area. We got the hit off the 61. We entered a long, and we wanted to take price right back up into the area in which it came from. So you can see there that on that particular buy scenario, okay, that was a successful buy trade, and we were only using the 8-hour chart because I believe this is where institutional money is sitting, 8-hour daily and weekly, and not so much on the smaller time frames. So yes, you can drop down for entry, but you're still going to be getting in right around the same price. So now that we were here on this particular movement, then we looked for the exact same opportunity here. Now, let me get rid of this Fibonacci level, and let me take you now to this candle, because this is where we came up to wick from. So all we did here was draw a Fibonacci from now the top of that wick to the bottom of this green candle. And again, you can see right here that the 88 rejected perfectly. So what did we do? We took a sell down exactly all the way back down to this level right over here. Some people closed out smaller trades. Some people actually held on to the longer trade on down to the next zone. Now, watch this. And again, this is the learning opportunity that I want you to focus on right here. So we've had two trades at the 61.8 and at the 88.6. Again, if price closes above or below the 100, that is where you would need to exit your trade, because there's a very good likelihood that then the trend, will change. But let's go now to the next scenario. Again, remember where originally price came from. Price came from this bullish engulfing candle. So again, putting a Fibonacci level at this wick again, back up to the highest wick that we had, which was again this wick right here. Okay, look what happened now a third time. We had price come back down to where? To the 88.6, saw rejection, got into a buy, and then closed this particular buy. Obviously, it was Friday and price was closing. So again, you've had three examples how you can literally sit on the Fibonacci levels on the higher time frame, and you give yourself a much greater reward to risk, because again, going back into the chart, you already know that if price was to, if you were going to sell in this scenario, if a candle was to come up, okay, and close above the 100 level, the zero level on the Fibonacci, in this particular case, because I have it inverted right now, you would need to close that trade. Okay, same thing here. If you were going to buy down here like we did, and we had a candle come down and close, that would need to be your exit, because then there's a good chance that the trend will continue. So again, I just wanted to give you a little perspective, especially for some of you who might be new to trading, don't fully understand Fibonacci. This is why being in a trading community can definitely help you learn this faster, and then you can see what we can see, because we have been doing this for quite a long time. So if at any point you get value in this video, hit the like button for me. I would greatly appreciate it. If you're brand new here, welcome to the family. hit the subscribe button, and then make sure that you turn on your notifications bell so that you don't miss out on any learning tutorials and analysis videos. And if you want to expedite your learning curve, if you want to pass any challenges that you might be doing with brokers, if you want to just continue to grow your account, okay, maybe you've been struggling, then head up to the website above. I hope to see you there. Once you come in, I'm going to greet you. I'm going to welcome you to the other members, and then we're going to get you started on your growth plan. Okay, so visit the website, theprofessortrades.com. Pick a plan that works for you. Come on in and check it out. If you don't get value, you can always cancel at the end of 30 days. But let me give you a quick insight. There's a reason why our retention rate is 92%. Okay, most people that come do not leave because they're being profitable. They're in a community, they're growing, they're building relationships. And so you're going to find yourself in a much, much better place. So let's go ahead and wipe the board out now. Amazing trades last week with natural gas. Now, I am going to head over to the weekly, and I'm going to kind of start here because I think this is going to be very, very crucial right here. Now, keep in mind that we are sitting on the April natural gas contract. Again, you should no longer be trading in the March contracts. Keep in mind, natural gas, the same as crude oil. Okay, the March contracts are going to expire in about a week or so. So don't get caught getting stuck holding a trade. Then the contract closes out on you and they close your positions. So anything moving forward, you should be at least April or June contracts. That way you have plenty of time in case you do want to hold a trade. So we do have structure, okay, that was broken here. So on the weekly, there's a possibility that we can, remain bullish, but we did tip right here at this 4.55. Okay, so this is going to be very important. If natural gas closes above 4.55, then we can expect bullish momentum to continue for right now. Now, if we look right in here at this particular weekly candle, we do have a gap that is still open at this level here, and I'm going to mark it right here at about 3.07. Okay, we have a gap there, and there's actually one more lower gap, which is all the way down in here, and we'll mark that as well. So as we get into our charts, we can refer to it. So these are gaps, and let me add that again. These are gaps that are still open in the markets. Now, for natural gas, it does not mean that it needs to close, okay, because these things can remain open for quite a while. We just recently had a gap that was closed from January of 2023, but I want to put it into perspective, okay? So let's now head over into our daily chart so we can kind of see a look at the price action. Now, forget the fact that there are gaps down there. And again, when there's a contract change, okay, gaps do not need to be filled. So keep that in mind. When there's a contract change, these gaps do not need to be filled, but these are current gaps off current contracts. But again, these contracts are going to expire here very, very shortly. But again, this is the April contract that we are working on. So this gap right here has a better likelihood to close by the end of the April contract versus the one way, way down here. So let's work with what we have right here. Now, something to keep in mind is going to be what is happening globally, okay, especially here in the US with natural gas. Okay, and if you read down at the bottom scrolling there, we are beginning to see signs that the forecast for the current 30 to 60 days out seems to be a milder weather conditions, meaning not a lot of snow, not as cold as predicted. And so when that's the case, usually the price of natural gas begins to fall because there's not a big demand for natural gas. So just keep that, keep reading the headlines. If you trade NG, keep reading the headlines on natural gas and the demands for natural gas, because the fundamentals do play a factor on price when it comes to natural gas. But on a technical analysis, we are going to be sitting on a couple of levels right here. Number one is we are going to be sitting on that level to the top side, and we are going to be sitting on this level to the bottom side. Okay. Again, if we do see price close above this level, we can probably have to stay bullish on natural gas, and vice versa. Once we come below this level, we should see the next few levels being hit, and understanding that we do have this gap at this level right here. So if we go to this 8-hour chart, we can clearly see we had that Fibonacci rejection that we showed you earlier at the beginning of the video, which came right back down into this 88.8 area. So what are we looking at now? Well, we want to give ourselves a high probability, lower risk trade. Now, keep in mind that on Sundays, natural gas loves to gap, and it loves to gap not small, but it could gap fairly large. Okay, so today's video on this analysis, we can't assume because we don't know where the gap is going to happen. So what I'm going to share with you is just basically on pure technical analysis on what we have in front of us, nothing to do where price may gap with the Sunday open. So based on the Fibonacci levels that we see here, the highest point to the lowest point there, we are going to begin to look to sell natural gas up in this area right in here. Again, knowing, as we mentioned at the beginning of the video, that if price was to shoot up past the 100 level and close, and we were trying to short natural gas here, we would need to close our trade by the 127 Fibonacci extension. Okay, there is no need to risk more than this small area right in here. So again, we're not assuming if we gap up on Sunday or if we gap down on Sunday, just based on pure technicals. What I'm beginning to see here on the bigger time frame is that we seem to be getting ready to make this possible M pattern in the market. Okay, so we will be looking for shorts in natural gas up in this area right in here once the market opens at 6 p.m. Eastern, and we begin to see what's happening in futures. And again, that's one of the advantages of being up in the group, is that we trade not only natural gas, but we trade crude oil and all of the indices, gold and silver, and the Forex pairs with live analysis every Sunday evening, because we have a gap strategy and folks are making a nice beginning of the week money with our gap strategy. So you're more than welcome to join us for that live event that only happens inside of our private community. So we'll be looking for short opportunities right up here with natural gas. Okay. Now, again, I do not plan to buy any highs that come up above this 4.55 area. If they shoot up above 4.55, I will not be a buyer. I will be looking for then the Fibonacci extensions to look to sell natural gas at these higher levels. Okay. Now, if this A scenario up here, we'll call this A scenario. Okay. If this A scenario up here doesn't happen, which I think for right now, from what I'm reading fundamentally, is probably less likely to happen than this scenario right here, which is the B scenario. Okay. The B scenario is that we're going to be getting a short attempt somewhere in here to hopefully bring this back down, because they did create a lot of liquidity in this candle here. Number one. Okay. Number two is there is still a lot of liquidity down at these lower levels. And of course, we talked about that gap that is sitting a little bit lower on natural gas, way down here at 3.07, but we will not entertain that anytime now. So if we do get price to close below 4.13, then that becomes scenario C. At that particular case, we stay short on natural gas, and we're taking it down not only to this liquidity level, but then to our next floor at about 3.7 right in here. Okay. So for the beginning of the week, if you need to take a screenshot, if you're not in the trading club, this is your playing field. These are the levels that we will play. As you can see, we are very, very successful. We're looking at these Fibonacci levels, okay, especially on the higher time frame. So these are the key pivot points, if you want to call them, or levels that you should be focusing on when it comes to whether you want to stay long, short, or what have you with regards to natural gas. Okay, so I hope you got some value in this shorter video on natural gas. I wanted to kind of get this out to you so you could start planning your beginning of the trading week with natural gas if you do trade natural gas. Okay, thanks for watching, and we'll see you on the next video.